Hi, and a very happy new year from BMT Tax Depreciation. 2015 has been a very interesting year for property investors. We've had unprecedented growth throughout the Sydney market and also the Melbourne market. What it means is it's been more difficult to buy in those markets. The yields have been decreasing, making it harder for those numbers to stack. APRA have increased regulation on the banks to slow investor lending. What that means is, as a new investor, it's not as easy to get a loan for investment property as it was in the past. For existing lenders, the banks actually increased interest rates, which is something we haven't seen for investors only for some time. This is a great reminder to be prepared for what 2016 has to offer for you as a property investor. I think that it's very important to learn from some of the things that we've seen in 2015 and look forward to 2016 and what the market may bring. I'd like to share with you some of my New Year's resolutions and tips as a property investor into 2016. Number one, go outside my comfort zone. Many of us invest around the corner from our home, around the corner from our last investment property. This is not necessarily where the best growth and the best returns from property will come. Looking into areas that are outside of your comfort zone is something that really should be considered. Number two, don't follow the herd. Investors tend to rush into hot spots. If they're hot now, they've probably had the price growth you're looking for. It's important to look at the full picture, the rental yields, and also looking for the area that still has some opportunity left for growth. Number three, look at the complete picture. Do I have a real understanding of the cost of holding this investment property? Do I understand the benefits of things like depreciation? I can get an estimate before I buy of how much that might be, so I can really crunch my numbers and have a deep understanding of what will this property cost me to hold. Number four, budget now for the future. Everybody gets busy and sometimes that budget gets left aside. I think it's very important to make sure that we've crunched those numbers, we've bought that property, we think we know what it's going to cost, we need to stick to that budget, we need to review that budget and see if we can improve that budget so we can get to our financial goals by the end of the year. Number five, learn from the experience. We've bought properties as investors in the past. What this means is that we can reassess these portfolios, reassess the performance of the decisions we've made in the past and help with the decisions that we make into the future. I think it's very important to continually educate ourselves. Sometimes the best education is the mistakes we've made, and sometimes it's the successes we've had in order to get the best out of our property investing into the future. By following some of these New Year's tips and resolutions and continually challenging the success of your portfolio, I'm sure that your 2016 investing will be very successful.